We're in what they call the crypto winter, so to speak, is
Yeah,
where people get out of it and they're kind of there, but a lot of like consolidation happens, and it's pretty much like every 3 years, like you can look at the chart and it goes up and then it comes back down, but not completely. It retraces,
Yeah.
and then it goes up again, and then so I mean, without clockwork, usually centered around like the Bitcoin halvenings, which I think the next one is 2024 might be the next halvening.
Yeah.
So I would expect like the next 6 months to a year will be a good time to accumulate. It might come down a little bit, but I think when the next run's going to happen, it's probably going to break 100,000.
So you're here today, Mr. Jason Freiert, to talk about cryptocurrency.
Yes, love crypto.
How much money have you made on crypto?
Well, I don't know if I want to share it because I'm not sure if I did my taxes correctly.
Yeah. Oh, well, now they're coming after you either way.
Yeah, but probably not as much as I could have if I sort of learned, if I knew now what I what I know now, what I did back then. But
because you would have like traded in and out.
Yeah,
or
well, I would have just held.
Okay.
So my first, I started getting back in or first into it in 2012, and probably 2011, 2012, and I think I bought my first Bitcoin. I think it was at like $70.
Yeah.
Was Bitcoin, and I bought 10 or 12 of them. And so, like, what? It's like, it was like $1,000. Like, all right, I'm going to put $1,000 into this. And, within a short period of time,
what year was that?
I think it was 2011, 2012. I bought it on Coinbase. So it was like one of the, Coinbase is still around, this biggest crypto exchange now. I bought it on Coinbase. And, I think like it probably dropped down to $20, and like I kind of just forgot about it. And then when that first like sort of cycle came around where I think it spiked up to about $900, I was like, oh shit. Like I was like, all right, I'm selling. Like I only put in $1,000. Now I have $10,000. Like, thank you.
Sure.
I'm gonna cash out like 1,000% gains. Like never apologize for that. And I think I held on to like maybe one or two. And I dabbled in like some Litecoin, and so
Is Litecoin doing anything these days?
Not really. Like so, and that's when I think it was in 2015, 2016, one of our web developers was like talking about Ethereum, and so I started getting back in. I was like, yeah, I got some Bitcoin, blah blah blah, and he was sort of explaining it to me, and I was like, dang, okay, this sounds like really legit. So like I think it was like $12, and so I had a little bit more money then, so I put in I think probably maybe like $10,000-$15,000 into Ether when it was at like I think $16 was like my average. So like I had like a good amount, and so I had learned a little bit about like not selling too early, and so I just watched it. I mean, that was the first sort of, I think it's 2017 cycle when it was like really going on. I think it peaked maybe at like 800, but I sold a lot along the way. So I mean, I definitely like cleared like 6 figures trading crypto.
Yeah.
But I still have just a ton in there because I think like it's gonna keep going. So, but like I said, if I just kept what I had now, like I would be
You'd be out. You wouldn't even be working here
yeah,
anymore.
Well, no, of course I would. Of course I would.
When was your first Facebook post? Because I know like you don't write any newsletters for us, but you kind of have like built a small following, a personal following on
Right.
Facebook because you're like telling your friends to buy crypto, and now you have people who hit you up and are
I think it was 2011, and I would make snarky comments like, oh, like Bitcoin's never gonna be. I was like, it's super cheap at $200, and I mean like, yeah, I mean,
and you were saying that like in jest. then a little bit?
Yeah, well, because I think it was when it fell down to it was like it spiked up. The first spike was like to $900,
Yeah.
and that was when it really started catching like mainstream, and it was like the first like sort of Bitcoin craze, and then it had fall down to like $200, and then that's when I was kind of like, man, I don't know, man, like, and I really started researching, and I was like, yeah, this got something here, like, and so $200 is I think when I really started like telling people about it, and the interesting thing was that people on social media, only a fraction of the people actually engage on a post, right? And it's like, I don't know, your mom and your buddies or whatever like that. But a lot of people like read them, right? That just don't engage at all. And so, I would see people like in real life, and they like, especially after like crypto would spike, and they'd be like, dude, like Bitcoin, I'm like, oh yeah, and they're like, yeah, you were posting about it, like I got some, and now I was like, oh okay. So I was like, man, like people are actually like paying attention to what's going on here, and so like people started like DMing me and texting me about like the crypto stuff, and I especially friends of mine, I'm not, I don't know their financial situation, so like I don't want people to, if they only have $1,500 to their name, like I'm not gonna be like, yeah, put it all into this Dogecoin or whatever. So I'm just like, yeah, like I like Bitcoin. Here's what I did. Like, I'm in these coins, and then they inevitably, like when it would spike, they'd be like, should I sell? Should I sell? And then when it would fall, they'd be like, oh man, what, you know what I mean? What's going on? And so I got to learn the sort of the crowdsourced behavior of like the crypto market, like early on, just based on anecdotal information from like friends and family.
Well, I would guess that people were generally hitting you up the most when Bitcoin was at its peak.
Oh yeah.
And then they're probably a little bit more quiet now.
Yeah. I mean, so what's crazy is, I mean, what, attracts me to Angel is the, the contrarian philosophy. And over the years, particularly with crypto, I have sort of developed a contrarian indicator system based on like friends and family and also like news, right?
Sure.
So
it's the old John Kennedy, his taxi driver, his limo driver or whatever.
Yeah, is asking for stock tips. It's like, I mean, human nature doesn't change, right? It's absolutely so.
So is now a good time to buy? 'Cause Bitcoin's down 70+%.
Absolutely, absolutely. Now is the time to get into crypto 100%. If the time was obviously 10 years ago or whatever, but then now's the time when it's out of favor to absolutely do it, and it's like pulling teeth. So and so if I'll like tell people ask me about it and I tell them and they're like, well, I'm gonna wait and see, then I'm like, okay, like now's the time to get in, because it's crickets during this time, but then when it starts to spike up, like I'll start getting the thing, and then that's like kind of my indicator to sell. Yeah, you know what I mean? Oh, hey, I know this new coin. Oh man, this, and I'm like, that's when I start taking money off the table, because I'm just like, okay, my friends and family, I love them, but they're not very sophisticated, and I don't know
the normies,
Yeah, exactly. So when it's reached that point where just random people are talking about it in the grocery store, and at Thanksgiving was the big thing, like then like it's kind of like it's time to kind of take money off the table.
Bitcoin's been pretty stable, right? Like since like June. Yeah, I feel like it's been the most stable that it's been, and I kind of wonder if that's like actually good for it in terms of like potentially being adopted as a currency.
Well, what's crazy is I think this year it's been one of the least volatile assets. You know what I mean? Like usually it's like, oh, it's down 50%, it's up 70% or down at whatever. But I think Bitcoin has outperformed the market this year, but only like it's up like 3% or something.
Okay.
You know, I don't know the exact numbers, but at least in the past 6 months,
Yeah.
it's been like
Yeah, I think it's been like basically since June it has been kind of flat while the rest of the market has continued.
yeah,
to
and you
trend
look
down.
at like even oil has gone from 75 up to like 120 and like back down. So a lot of these, it is sort of stabilizing, but it's more so. I think it's just it's kind of gone out of favor, but it's building that base. So I think the next run is going to probably not be quite as percentage-wise as stuff in the past, but it's still going to be huge, relatively. And so we're in what they call the crypto winter, so to speak, is where people get out of it and they're kind of there, but a lot of like consolidation happens, and it's pretty much like every 3 years, like you can look at the chart and it goes up and then it comes back down, but not completely. It retraces, and then it goes up again, and then so I mean, without clockwork, usually centered around like the Bitcoin halvenings, which I think the next one is 2024, might be the next halvening.
Yeah.
So I would expect like the next 6 months to a year will be a good time to accumulate. It might come down a little bit, but I think when the next run's going to happen, it's probably going to break 100,000.
Yeah, I feel like a good time to sell is right before the halvening, right? Because it's like everyone's.
It runs up to it, and so I think people do notice the patterns. So there's a lot of trying to preempt that kind of stuff. But overall, like it's just popularity in that space like tends to sort of build around those happenings. But there's also just the economics of it, because the difficulty of mining gets harder during that time. So there's actually real live economics going into that.
What about Ethereum?
So I love Ethereum more than Bitcoin. I own the most Ethereum, partially because there is sort of a group of developers that will upgrade Ethereum based on various hurdles that, like, Bitcoin hasn't changed since it started. They don't even know. The dude who invented it is like probably dead or whatever. Like, they don't know. Yeah. And so that's good in a way because it can't be changed. You kind of know what to expect. But Ethereum, especially nowadays, but Bitcoin and a lot of these mining cryptos sort of get a bad rep from the like ESG, like environmentalist crew, like, oh, it's it costs so much to mine, and like, oh, you're killing the planet and all this kind of stuff. So Ethereum just went through probably its biggest upgrade ever, which was its move from they called it the merge. So it's a move from the intensive mining process, what they call proof of work, to now what they call proof of stake. So it reduced the energy consumption of securing the network by like 99.5%. So there's really no reason that sort of crypto is bad for the environment has been taken off the table. And not only that, but it that upgrade has made Ethereum deflationary. So Bitcoin, there's only going to be 21 million ever mined. But the supply is sort of slowly coming to market, but you kind of know there's a cap at 21 million. Ether, there wasn't really a hard cap, and depending on like how different economics in the network, the supply would grow or shrink, and so. But now it has basically reached the point where the supply is being taken off the market because there's no more mining. So, before you would mine and the miners would get paid, new Ether would be minted, and you would also get, portions of the transaction fees when you do transactions. Now it is like 100% you're getting paid on the transaction fees, and there's no real mining fees. And basically the more Ether you own, the more you can approve these transactions, and that's how people are getting paid. And there's different security things in there that, a portion of it gets burned, which is like lost forever.
What about criticisms that the moving from to proof of stake is making it more centralized?
I've heard that, and I don't really see the argument because so the idea is mining is what, like, anybody can do mining, but like, can you, like, you need some costs.
Sure.
You need to find a low energy, an efficient energy source, which a lot of people use renewables or, different parts of the country. You need to buy the equipment. So it's not like the people that are mining, it's pretty big mining operations. And so now it's just like, now you have to have a minimum amount of ether to do a node, and I think it's like 32 coins, which it's trading at like 1,300. So you need like $50,000 to $60,000 to sort of run a node. But then you can do the same thing they're doing with Bitcoin and other miners. You can pool your stuff together. So I don't really buy the fact that it's like too centralized. I think you still. People think like, it's the same way you could combine all your mining hashing power on Bitcoin network between these different pools to sort of like control the network. You can do the same with the Ether proof of stake. The difference, which actually makes it better, is they have penalties for people that are trying to like get around the network, where they just like, when your stuff is staked in the network, like if you're a bad actor, they just take your coins and burn them.
Okay.
So, like,
how do they determine if you're a bad actor? Like,
there's governance that goes in, like the decentralized, where they can kind of like vote and stuff like that. But really, it's like, the whole idea around crypto is it's trustless, or there's not a centralized authority that says like, hey, this transaction is good or bad.
Yeah, you need the community to decide.
Yeah, so you need the community to decide. So, if there's, if I send if I try to say, hey, this guy sent me this ether and it didn't happen, and the rest of the network says, no, it's still there, or this guy sent this, then there's mechanisms in there to just take those coins away, and then you're punished. So you're extremely disincentivized to be a bad actor in there, and you would have to get like, most of the crypto in the world to kind of do it. And that's what I like about Ether, is it is large enough now, and there's a big enough pool out there in different hands that it actually makes it truly decentralized. However, there is still that sort of component in the developing end to sort of push it forward and upgrade it. So that's why I like it, because it's the best of both worlds.
Sure.
But that being said, like, I still think Bitcoin is like the gold standard too. I mean, it's basically, I look at Bitcoin as like gold, and Ether as kind of like, oil/energy.
Yeah.
And you want to have both in your portfolio.
Do you own anything else?
So I own Polygon, which is known as a layer 2 sort of protocol. And
so is that built on Ethereum?
Exactly. And it's just a way to facilitate faster transactions. So basically, the layer 1s are Bitcoin and Ethereum, and
Solana? Is that a
Solana is one, is another layer 1, and like Cardano is another like layer 1. And so on top of these, there's only so much throughput that these blockchains can have. So if they want to scale to become the world's supercomputer, like, they have to process a large number of transactions and a given time. And that's the biggest sort of knock against Bitcoin and Ether, is like, like a centralized computer system can process 4 million transactions a second, and Ether can only do like or Bitcoin's like 12 or something. Like, it's so basically the solution is these layer 2s on top of that, where a lot of the microtransactions that take place, I want to pay somebody $5 for a cup of coffee using crypto. Then you combine a lot of those transactions, and sort of the Bitcoin has the Lightning network, and Ether has a whole lot of different layer 2s that facilitate different things, and sort of add features on top of that. And then the settlement layer where like it like is immortalized on the blockchain is the actual Ethereum blockchain.
Are there layer 3s?
So, I mean, like what you would call layer 3, I think would be, I don't know, like the onboarding, like the actual like software companies that are out there.
Yeah.
So you could call like Coinbase or PayPal or like Circle and Square, these like as like a layer 3, and they're just sort of meant to facilitate these sort of things. But at the end of the day, those are still like, you know, I'm all about decentralization, and those are still like companies that are controlled and can be like censored or pressured by governments.
Sure.
So you really, like, if you're going to truly use crypto, you don't really want to have the majority of your crypto in a layer 3 type wallet where technically it's not really yours, it's still custodian. And I mean, basically the way to describe it is, you know, a bank, right? So you have $10,000 in the bank at, you know, whatever, Bank of America. Like, yeah, there's a reasonable expectation that, like, you know, I can withdraw that money or I can send it across. But, you know, for whatever reason, if the government says, hey, like, I want to freeze, you know, they send a notice to Bank of America, freeze this guy's account. Like, they'll freeze it.
Yeah, but they can't do that with Ethereum, right?
They can't. They can't if you are actually holding it in your own personal wallet.
Sure.
So, you know, Coinbase though, and there's varying. I guess this will probably happen. You know, there is varying requests that they can make to there, and so I guess that's a legal thing that needs to be kind of worked out. I mean, so like Canada, when that trucker, that whole trucker thing was happening, I think in Ottawa, and they were like blocking stuff, and then like people were raising money for the truckers to like get food and stuff like that. Like Canada, like became pretty authoritarian on it.
Did they seize a lot of Bitcoin or?
So no, well they tried to, right? So what they did, I think it was, and if this isn't like totally accurate, definitely people can correct me, but they started a GoFundMe, I think, and like Canada was like, no, like don't pay out that money like to GoFundMe or whatever. Yeah. And I guess GoFundMe was like, okay, like, but they also, like, people started using crypto to do it, and they sent like basically seizure or like cease and desist to like, I think it was some Canadian crypto companies that was basically like, don't like take this person's money back or whatever, or freeze it or whatever. And the way their system was decentralized, and they basically were like, that's not how crypto works, guys. Like, we can't, you know what I mean?
Yeah.
That's kind of the whole point. So you're seeing the truly way, and that's, if you don't have that like ability to send money wherever, then the crypto economy and the whole point of it is sort of lost.
Yeah.
And then you might as well just go back. So you do have to preserve those aspects of what crypto makes crypto in the first place, which is the government can't take your shit.
Yeah. Well, it seems like they're constantly seizing it, and so it seems like, I don't know. It's like, which is it actually this like savior that's gonna kind of like keep the government's hands out, or is the government gonna just like find a way to get their hands in it no matter what?
Yeah, I think they're being very sort of sneaky about it, but I honestly think at least Bitcoin and Ether has gotten big enough now that they're not gonna be able to mess with it.
Yeah.
But you know, Bitcoin, you can trace stuff, right? So there has been, you know, some of these hacks that have happened, like ransomware, where they're like, hey, send us $10 million in Bitcoin and then we'll unlock your system.
Yeah.
Like, they can, if those do get paid out, they basically like can track the addresses and they make sure. I mean, there's different ways.
I feel like criminals like think that they can use Bitcoin to escape. Like they think that it's private and it's not. It's like it's actually more public than.
No, it is. Now you just have to find somebody. They had that thing called Tornado Cash where you kind of send it in and it kind of does it around.
Oh,
and
really?
Okay. Yeah. So there's ways to get around it. But
So
a lot of
basically just a money laundering.
It is. It was, and that's basically one of the biggest sort of criticisms now, and that people think is like, hey, like. This is just for criminals. Like, why would?
Well, it doesn't have to be for criminals. It's just for people who don't want to give their money to the government, right?
Well,
and I think
exactly.
like that's like kind of like the broader vision of crypto in the end is this kind of like idea that the government has absolutely no access to it, but then anything that does that, anything that makes it a little bit more anonymous seems to kind of get like ostracized.
Yeah, and they want to focus on that because they want to say, oh, like criminals use this. But, I mean, criminals find a way to exploit every sort of technology out there. So there's definitely different ways to put in place to limit that. But, I mean, criminals can transact in cash too. Like, and that's like sort of, they have. Yeah.
They're trying to get rid of that too.
Well, yeah, exactly. So.
All right. So, speaking of government intrusion, or at least government kind of going after things, I know the SEC is going after Bored Apes, the Yuga Labs. Have you heard about this?
I don't think I've followed that.
Yeah, they're basically saying like, you
it's
guys,
money laundering.
You listed unregistered securities.
Yeah, I mean, so that they're NFTs, right? Yeah. So that's
which
something
really is kind of like an unregistered security.
It is, in a way. I haven't dabbled in NFTs. Like I don't think they're like necessarily scams, but a lot of them are.
Yeah.
And like, I just don't understand. Like, I mean, some of the prices that some of these were like going for were just astronomical, and a lot of people think that they're basically like money laundering. Like, I have a I'm going to sell you this like big thing for $200K in Ether, and then we're going to hold it and do it back and forth. But I mean, if you compare it to art, like an actual physical piece of art, to me it should probably be treated the same as a painting, if that's what you think. So whatever the rules apply on painting, and an actual piece of art, like I know that's a lot of that's how people sort of wealthy people will stash their money too, with investing in these various pieces of art and like not actually take delivery of it and all that kind of stuff. But yeah, NFTs, I think those are still like, that seems to be where like the pumpers seem to be like living now.
Yeah, I kind of like the concept of what an NFT can be, but I haven't seen anything yet personally that makes me think that it has like a lot of value.
Yeah, and I think people, I don't know, when you get down the art path, I'm like, I want something a little bit more physical or
tangible, something you can hang up on your wall. Yeah, like what is art when it's like in a it's just purely digital form? I mean, I guess people do spend a lot of time.
Yeah, I mean, to me, a lot of that stuff is, and at the end of the day, any art is like this, like in the eye of the beholder. Like any sort of collectible is like a value placed on whatever anybody is willing to pay for it. So like, a friend of mine is really into collecting sports and like movie memorabilia, and someone who really likes the Baltimore Orioles is willing to pay $50,000 for a game used Cal Ripken bat or whatever, and someone else is like, it's just a piece of wood. But at least that's like something physical.
Yeah.
The digital stuff, and I think like some of the better people are using sort of like other real world like perks that are attached to it. So on the NFT realm, like the idea of allowing artists to collect royalties through that like seems kind of intriguing. So like I think like ticketing will probably be like, I could see that being a big thing when when Chris Rock got punched in the face at the Oscars or whatever, was it the Oscars? Yeah. He apparently like his tickets were like went up 4 times on.
Sure, but
like,
he doesn't get any benefit
on the
from
secondary market,
Yeah.
he didn't get any. So he had his retail tickets was like $150 or whatever. It was
Sure.
still like a lot. But then like people were like, oh, I want to go to Chris Rock now because he's probably going to say something about this or whatever. And so they go on to StubHub or whatever and they buy it for there, and StubHub makes some money. And obviously, like, Chris Rock had made his money with the initial sale.
Yeah.
But when stuff like that's happened, if you have an NFT attached where you're like, hey, every time this particular digital asset changes hands, like the originator, which in this case would be like Chris Rock or the artist,
Gets X
would
percent.
get like a percentage of it. And so that then like the whole idea of scalping actually becomes like a positive for the artist, where is like, you don't, it just kind of seems like, you're trading off of someone's like art or name and not, giving anything back to them. So I think that's where it can really be a benefit. And then you can also just be like, hey, like, how's a collectible ticket here? Like, you actually, if you own this, you get 10% off like the next show I have.
Yeah,
or the
I
next
kind
piece.
of like NFTs as like a membership thing.
Yeah.
That gives you kind of perks. I have a friend who, I don't know if it's an NFT or what it is exactly, but he's basically part of like a crypto like commune. And he has, it's like he basically pays these membership fees and it gives him access to like certain living spaces which change over time, and like the community like will vote on like where they're gonna, like, they'll rent an Airbnb or they'll like rent a camping ground and camp out, and they like provide food for people and they vote on things. So
And the membership isn't in an NFT.
I don't know if it's an NFT or what. I know that it is.
Thing, yeah.
I know that he pays for it with Ether. So like I don't know. And it's like a month, and it's a monthly fee. And if you don't pay the fee, then it goes back up on like an auction block, and someone else can get it.
There's a lot of interesting things that are happening, and I think a lot of them won't like play at like won't actually have some future. But I mean, the way I look at it is this is the new like .com era. So going back into the .com, you have the whole pets.com and all these like just a random website being worth like tens of millions of dollars that didn't even have a product, and people were like, oh yeah, and most of them, 95% of them crashed. But Amazon was launched in 1997. They're still around. And the next wave, like Google came out, I think in 2004, 2005, which was like in the rubble of the .com. And they're,
I mean, Apple was trading around that time. Microsoft was trading around that time. And if you look at the discounts and what you could have bought those stocks in at that time, it would be insane.
So, I mean, that being said, like, people were buying. I mean, I remember, because that's when I like sort of really got involved in programming and stuff, was during the first .com, and it was, people were like, oh yeah, you gotta buy this, MCI, WorldCom, like, it was the same sort of thing, like random people at the grocery store talking about what stocks to buy, and who what do they do? Who cares? Like they were up, 100% yesterday. So that's kind of what you're seeing in the crypto space. But there is some value to the underlying technology, but the majority of it is garbage.
Sure.
And, so that's why you sort of need to like follow someone that researches and like knows about the technology and sort of can help you kind of navigate that. And that's, one area that, we do, same as stocks, help. I mean, the same thing with stocks. Like, there's a lot of fucking shitty companies out there, too.
Yeah.
And so no one has time to go through all of them and try to.
The stock market is complicated enough, and then crypto is like a whole different level. I feel like it's definitely something you need to have someone who's able to break it down for you in simple terms.
Especially just the regulation aspect of it. And that's why I don't really mess around with the Doge coins and the so-called meme coins, is just like, because I like to really learn about the technology. But I mean, that being said, just because the technology is good doesn't mean it's going to be a good investment. So, I mean, I think a lot of the winners out of this will be actual public companies that have stock that leverage crypto to a certain extent. I mean, the biggest one is obviously Coinbase. Like, Coinbase is actually, like, I think Coinbase is a great investment.
Yeah.
Like, especially it's gotten crushed, but they, you know, they had first mover advantage. They have a ton of, like, you know, cash that they still have on hand. And
do you think that the banks have any time to catch up? I saw that Fidelity had opened up. They're going to start trading Ether, or like let their customers start trading Ether soon, and they're like the 5th largest asset manager in the world. Can they basically just kind of like suck up Coinbase's business by being like, you know what, you guys can trade it now, and why would I sign up for a Coinbase account when I already have?
Yeah, it's kind of interesting when you have like old world players go into the new technology space. I mean, I look back at the .com, like Blockbuster could have easily, and they tried to like do what Netflix did.
Yeah.
You know, they tried to like super late.
Well, that's kind of what's happening with GameStop, I feel like, is that they started to like, they're like, oh, we're going to do NFTs now, but it's like you own all this retail space, it's becoming useless, and that's just going to become a liability. So
yeah, they've just been creative at like holding off on like their dying, you know, business, in my opinion. So it's very, and that's not to say that like banks are going to like just be supplanted by the new companies like, you know, Coinbase and, you know, Binance and these like crypto exchanges. But it's just like, you know, being an old world legacy company, it's very hard to, that's why a lot of them just kind of acquire a company to do that. So, although, I mean, banks got so much like, you know, resources to do that. And, but I do think the banks will probably get in more on the institutional end. You know, you were talking about this new like, potential like law that's being passed about like modernization.
The Retirement Modernization Act. Yeah.
Right. And so you know, right now, I think I don't know if it's like just pension like requirements or something, but very few pensions and these guys that manage these big funds like either are allowed to or capable of investing more assets into crypto. I think it's like less than a percentage.
Sure.
Less than 1%. So even I think a lot of them want to increase that to maybe at least like 5%.
Yeah.
So if you think like all these pension funds or anything like are just able to go from 1% to 5%.
Yeah.
In their like sort of digital or like, you know, non-traditional investments, there's going to be like a flood.
Yeah, because you have trillions of dollars tied up in people's 401ks that like they might want to put it in crypto, but they're not going to because they can't.
Right. And I think most people, the consumer is a little bit weary of the whole idea of, you know, managing their own
crypto account on Coinbase,
and stuff like that.
It's a pain in the ass.
It is, and it is. You hear stories like about like, oh, like you lose your private key, like it's gone. Like the guy, like, you know, still looking for his hard drive.
You have a house fire.
Yeah.
You know, what happens then?
So there's different ways I think you can do it, but your average person is gonna, if they just want a small exposure and they're not like super, you know, like I'm like super into that stuff. I actually met with a financial guy last year and like I was telling him about the accounts and he was like, "You're way overweight in crypto."
Yeah.
And I was like, "Yeah, probably, but like I'm good." So I did end up taking a little bit more off the table then, which was good because I mean it was pretty high back then. But the majority of people, you know, if they're, you know, financial person is able to say, "Hey, yeah, we have this fund and, you know, 5% of the assets are going to be in crypto," like it's just going to help their returns if they're investing it wisely.
Yeah.
So.
All right. Anything else?
No, I'm glad I could come on here and talk about crypto. It's one of the few areas that I enjoy researching and learning about. And I do think like it's going to be like in 10 years, like it's going to be one of these things where, you know, now the internet is, you know, just everywhere. You can't imagine our lives without it. Smartphones, like it's a technology that is still being like sort of worked out, but it's going to be a net positive, I think, for you know, the world, and allow for a lot more like financial freedom for people using stuff like micro payments and just varying degrees. I think it's you know, it's going to be huge. And so I'll just say with buy Bitcoin and Ethereum.
Not financial advice.
Yeah, not financial advice, but yeah, buy Bitcoin and Ether.
All right. See you all next time.